Hello everyone, I hope you guys are doing well and your studies are going in full swing. Now in today's video, we are going to discuss about Index 24, which is on related party report in your CA final FR. So this will be a complete conceptual understanding as well as all the important questions. So this will be your one-stop solution for everything regarding related parties. So let us quickly get done in less than 30 minutes and get this standard out of our way. So when you look at a related party, what does this standard cover? Well, there are two main parts of the standard. First, identifying who all is a related party, and second, what will be the contents of the related party report. Now, where is the related party report placed? It is placed in the notes to accounts, both in your SFS as well as in your ZFS. And this is not one of those core finance statements like cash flow. It will be shown in the notes to accounts. Now, why do I need to show a related party report? Well, because there is a possibility that if you do some transactions with related parties, you might not do it at fair prices. So, a question comes that will I show only those transactions in my related party report that have happened at a fair price or other than fair price? The answer is no. All transactions which are done with the related parties, whether they are at fair price or other than fair price, will be shown as a part of the related party report. Now remember, you're not a transfer pricing officer to decide whether the transaction is at fair price or not. If there is a transaction which is done with the related party, then that transaction will have to be shown as a part of the related party report. Now for that, you need to figure out who all are related parties. Now there are two main areas, or there are two main parties which you will cover over here. First is individuals, that is persons related to a company. Persons having control, that is an ability to direct, which usually comes at greater than 50% stake. Like for Reliance, there can be Mr. Mukesh Ambani, or a person who is jointly controlling, or a person who is significantly influencing. Like you see a lot of these sharks taking a 20, 30, 40% stake. They might be significantly influencing the company, in which case they can be a related party as well. Now, the thing is, when you look at these three entities or these three parties, you only look at the ownership relationship. However, in a company, it is very much possible that there are certain key managerial personnel, certain important personnel in the company who have the right to control, direct, or even plan the affairs of the entity. These are key managerial personnel. Now they might not have a stake in the company, but the fact that they they occupy important positions in the company, like directors, maybe full-time, part-time, independent, non-independent, executive, non-executive. Every director is generally a part of that overall strategy making process, and hence directors are usually key managerial personnel. Other than directors, there can also be important personnel like CXO, can be CEO, can be CFO, can be CEO, chief editor for a newspaper, chief technology officer for a tech company. All of these are important employees who are in charge of planning, directing, and strategizing the affairs of the entity. As much as you want, an article as of now is not a key managerial personnel, because you're not responsible planning, directing, and managing the affairs. Sir, we do everything. Well, maybe then you are, but generally, when you're looking at a key managerial personnel, these are important, usually like function heads who will be responsible planning, directing the affairs of the entity. So these would be your related parties. Now the small nuances that you have to see over here is the related parties over here. If you're looking at as an individual, the individuals over here, if they are directly identified as a related party and there's a transaction between the company and that person, this transaction will come in the spotlight, and hence what you might want to do is you want to circumvent or bypass a provision. Then you will catch hold of your trusted people, like your relatives, your close family members. So the standard has said that when you are identifying a related party relationship, the related party relationship will be between the entity, the reporting entity like Reliance, and let us say the persons, including their close family members. So the standard treats the person, including their close family members, as one and the same. So who all is covered under the close family? There can be the spouse, children, even they cover domestic partner. It's, remember, an international standard, and internationally living relationship, domestic partners are quite common, and hence your spouse, children, domestic partner, children from the domestic partner, all of these are related parties. Further, your parents, your brothers, sisters, and these are real brothers, sisters, your siblings, not your cousins, are treated as related parties. So basically, if I look at maybe a CEO, the CEO is a related party, he's a key managerial personnel, but the CEO's spouse or children or parents or brothers, sisters will also be taken as related parties over here. Now, usually when you look at KMPs, the KMPs of the reporting entity will definitely be the related parties. However, even the KMP of the parent, like Mr. Ambani, might not be sitting on the board of Jio. However, Jio is a subsidiary of Reliance and Mr. Mukesh Ambani might be sitting on the board of Reliance. So he might still call the shots in Jio by the virtue of the fact that he is a KMP of the parent. So when you look at a key managerial personnel of the reporting entity as well as the parent entity will be taken as related parties, but the key managerial personnel of my subsidiaries are not my related parties. So over here, these are person level relationships with the entity. Second, which is more important, are the entity level relationships. So if I am the reporting entity, like I am Reliance Industries Limited, for me, the entities which are members of the same group, how will I define the group? Entities which are my parents, my subsidiaries, including my sub-subsidiaries, parents, including my ultimate parents, all of that will be related parties. But at the same time, even my fellow subsidiaries or subsidiaries which are under the common control would also be related parties. So your entire group is treated as a related party. So for example, if you have a parent, you have subsidiary 1, subsidiary 2, below that subsidiary 3 and 4. Now, because they are all controlled by the same ultimate parent, all of them are treated as members of the same group, and hence if your reporting entity is S3, for S3, even someone like an S2 will be a related parties because they are members of the same group. Remember, joint ventures and associates are not members of your group. They may be related parties under some other clause, but they are not your group members. It is important to figure out who all are your group members. That is usually your parents, including the ultimate parents, subsidiaries, including your sub-subsidiaries, and even fellow subsidiaries. That is under the common control. Like there may be Tata Sons as a common parent, and Tata Steel and TCS. Both of them are subsidiaries, for example, of Tata Sons. They will be treated as members of the same group, and all of these are treated as related parties. Now, that is your first clause. Second clause over here is your joint venture and associate. We said they are not group members. However, they are also related parties. These are also parties which you can control, jointly control, or significantly influence. And hence, joint ventures or the associate of the reporting entity. So over here, there is P. P as a joint venture J1 related. P as a associate A1 related. At the same time, if you have a joint venture or associate even of a group member, that is also treated as a related party. Like for example, there is P. P as S1 and S2. Both of these are group members of P. Now, J1 is a joint venture of S1. Now, if my reporting entity is S2, S2 will say that J1 is not my joint venture. However, it is a joint venture of my group member. And as a result, J1 is the related party. However, if instead of S1, this was A2. Now, there is P having A2. A2 is not a group member and A2 has a joint venture. Will this be related party? No. Why? Because for S2, this is not a joint venture of a group member. A2 is not my group member. Well, A2 is the associate of my group member. So A2 will be related to S. But, so why is A2 related? Well, it is associate of a group member. It is associate of P. However, J1 is not related because it is a joint venture of A2 and A2 is not my group member. So one needs to be remembering that when you are preparing this, you might say that, well, we can kind of make this as an entire box. Whatever is a group, you can make it as a box and you can treat it as one and the same. So over here, if there is J1 who is the joint venture of S1, J1 is a related party even for S1, S2 as well as P. Okay, a similar and a more complex version over here will be P having S1, S1 having J1 and then J3. Now this is an entire group. Now when I look at J1, J1 is a joint venture of S1, that is my group member for S2, and hence J1 is a related party even for S2. However, J3 is not a related party because J3 is a joint venture of J1 and J1 is not a group member. So one needs to remember that when you look at a group is a parent including the subsidiaries. Associates, joint ventures, etc. are not a part of the group. However, a more complex case which is possible is there's a possibility that there is P as S1, S1 as S2. This is all part of a same group. But then there is A1. Now, is A1 related to P? Yes. Why? Because it is an associate of a group member, that is S2. However, when you look at A2, A2 is not related to P because A2 is an associate of A1 and A1 is not a group member. However, like you like P, S1, S2 are one and the same, can I say associate and its subsidiaries are also one and the same? So when I look at P, S1, S2, this is one single group. In a similar way, A1 and S3, this is also a single group. So when I look at P is related to A1 because that is an associate of a group member. However, when I look at the subsidiary, for all practical purposes, A1 and S3 are one and the same. And as a result, we will say that for P is related to both A1 as well as S3 because an associate includes subsidiaries of an associate. A joint venture includes subsidiaries of a joint venture. So when I look at associate being related, its subsidiaries will also be related because the associate and its subsidiaries are one and the same. But the associate and its associate are not one and the same. Like when you will study consolidation, you will say, let us say P Limited and its subsidiaries, they are treated as one and the same. Similarly, when you go to the next point, both entities are joint venture of the same third party. Like this is two joint ventures of the same third party. Like there is P, there is J1 and J2. Remember, for J1, P is related. However, J2 is not related because, well, technically, at least as per clause A and B, not related because it is not a joint venture of a group member. P is not a group member. And hence clause C comes in where it says that, well, you know what, even if both entities are co-joint ventures of the same third party, they are related. Now over here, the language is a little ambiguous. They say that it should be joint ventures of the same third party, and they don't specifically say whether there is a third party being a separate entity or the third party being a separate group. Generally, from a practical understanding, we can say that even the same third group concept applies, which means over here there is P, S1, S2. This is the same third group. J1 over here is a joint venture of S1. J2 technically is a joint venture of S2. So they are not joint ventures of the same third party. However, S1 and S2 are part of the same group. And hence we can say J1 and J2 are related because they are joint ventures of the same third group. That is the interpretation we take, though Institute has not given you enough sums or clarifications for this aspect. Now, from what we have studied, we have said that, okay, co-subsidiaries are related. Like you look over here, S1 and S2 are related. These are fellow subsidiaries. In a similar way, co-joint ventures are also related. However, what if at one place I have a joint venture and in the other place I have associate? They are still related. So one entity is a joint venture, another entity is an associate of the same third party. Then even they are related. So what is the only thing which is not related? Well, if there are two co-associates, remember that if there is a investor P, below that you have A1, below that you have A2. Now between A1 and A2, there is no related party relationship. A1 may be related to P, A2 may be related to P, but between A1 and A2, there is no related party relationship. You need to remember that co-associates are treated to be distant people and hence they are not treated as a part of your overall related party relationship. It's a very important thing. So one needs to remember that if there is P which has X and Y, let's say X and Y is S1 and S2. We say they are related. Why? Because they are members of the same group. Clause A. There is S1 at one place, J1 at the other place. Still, S1 and J1 are related because J1 is a joint venture of a group member, that is P, and hence under clause B, they are related. S1 and A1, they are still related because it is an associate of a group member, still related under clause B. At both sides, there is a joint venture, related because both entities are joint ventures of the same third party, clause C. One side there's a joint venture, one side there's an associate, still related under clause D. So the only place where there's no related party relationship is where there are co-associates, because there's no clause which says that co-associates are related parties. Maybe at both places if there is influence, maybe you don't have enough clout to influence pricing, at least as per the standard. So over here co-associates are not related parties. Now that understanding is summed up in clause E, where clause E says that ABCD just looked at companies. However, it is possible that P, which was a parent company, instead of that there may be a Mr. P. So what I'm saying is, if there's a person at the top or his close family member, if there has to be a related party relationship, then at least at one of the two places, the person and his close family member is treated as one and the same. Then at least at one of the two places, there has to be a control or joint control. So like we said earlier over here, if both places there is just significant influence, there is no related party. However, at one of the two places, there should either be control or there should be joint control. and hence at the other place you might have a control, a joint control, or even significant influence. So the understanding over here is that if there's Mr. X and a close family member, let's say Mrs. X or Mr. X himself, if that Mr. X has control or joint control at one of the places, let's say A Limited, that same Mr. X or their family member, close family member, has control, joint control, or even significant influence at the other place, then between A and B there will be a related party relationship. Now the thing about a person is there can also be a KMP relationship. Now KMP relationship is very close to a significant influence, because in KMP you cannot control or jointly control, you are still working on behalf of the overall shareholders, and hence KMP relationship is like a significant influence relationship. And as a result, over here, even if at both places you have a mere KMP relationship, you are not treated as a related party. At one of the two places you need to have control / joint control. So over here clause E says that at one of the places the eligible individual, who can be a person controlling, jointly controlling at one of the place, that same person or his close family member controlling, jointly controlling, significantly influencing, or acting as a KMP at the other place, then A and B are related. So sir, when is there no related party relationship? When at both places there's either significant influence or KMP relationship, in which case there'll be no related party relationship. That is your clause E. So these are the top 5 clauses. And then you have clause F and G, which are not as important. Clause F says the entity and its post-employment plan. So for example, you have an employee welfare plan and the entity is contributing money to the employee welfare plan, which will pay in turn to the employees, including KMPs. So we will say that, well, your post-employment plan and the entity are also inter se related parties. And last, usually key managerial services are provided by individuals. However, I can always appoint a company or a consultant to discharge key managerial services. And hence, if a company is responsible for a key managerial service, the company is also treated as a related parties. So over here, if I do a quick summarization on who all are related parties, as an individual, persons controlling, jointly controlling, significantly influencing are related, including their close family members being related, and KMP, who are responsible for planning, directing, strategizing the affairs of the entity as well as of the parent entity, are related. In terms of entity to entity relationship, members of the same group, joint ventures associates of the entity or of the same third or of a group member are related. Two entities which are joint ventures of the same third party, or one entity is a joint venture, another entity is an associate of the same third party, are related. And lastly, when you look at individual relationships, persons including their family members who are either having control or joint control at one place and control, joint control, significant influence, or KMP at the other place, the two entities will be treated as related. There will be no related party relationship if there are two associates or there are two entities where you have merely two common directors or key managerial personnel. Apart from that, companies providing key managerial services are also related, and an entity and its post-employment plan are also treated as related parties. So who all are not related? Sir, co-associates, which is important, are not related. Further, co-venturers are also not related. So in, let's say, Starbucks India, you have Tata and you have Starbucks USA. Now both of them are related parties for the joint venture, but Tata cannot do anything with Starbucks USA. Starbucks USA cannot do with Tata, and hence the co-venturers are not related parties. Further, when you look at two entities with common directors or common KMPs, they are also not related. Now, other clarificatory provisions over here are providers of finance like banks or trade unions or major suppliers, major customers, major distributors are not treated as related parties, irrespective of what you will study. In transfer pricing for associated enterprises, it has a separate definition. Here we are saying that there may be an important customer, I may be solely dependent on a single customer, a car company like Mahindra. However, Mahindra cannot force me to sell at a massive loss. My parent can force me to do that. And hence, though Mahindra is my sole customer, an important customer, I cannot say that the transactions with Mahindra fall within the related party definition. Perfect. Banks might give me big loans, but that does not make a bank a related party. Okay, that is the first part of the standard. The second part of the standard goes into the related party report. There are two parts of this report. In the first part, you will identify the related parties and give the name and the nature of relationship. Now, there may be a lot of related parties. Do I have to give the name and nature of relationship of every party? Well, if there's a control relationship, like a subsidiary, a sub-subsidiary, a parent relationship, you have to give the name and nature of relationship, irrespective of whether there are transactions or not. However, for every other relationship, like a joint venture, an associate, a KMP, you will give disclosures only of name and nature of relationship only if there have been transactions during the year. If there have been no transactions, you don't need to give any disclosure of the name or nature or relationship. Further, in case of my holding companies, I'll try to identify holding companies if applicable, which is the ultimate holding company, what is my immediate holding company, and if applicable, then the next most senior parent. A next most senior parent is a parent which is closest to the reporting entity other than the immediate parent and the ultimate parent, which is preparing accounts for public use. Like you will have a situation like this for S4. The immediate parent is private. This is my immediate parent. The ultimate parent is also private. So they're not preparing accounts for public use. However, S2 as well as S1 are listed and hence they are preparing accounts for public use. So for S4, we can say that closest entity is S2, which is preparing consolidated accounts for public use, within which S4 will be consolidated, and hence you can identify this as a next most senior parent. If applicable, it might come for an MCQ. Now, an important thing that you need to know over here is details regarding transactions and outstanding balances. Over here, in the related party report, you'll have to give a section where you have to give the details of transactions. And when I say transaction, it can be sales, purchase of goods, of machinery, of assets, of loans given, loans taken, interest income, interest expense. All of these will have to be shown, all of these transactions. And in fact, there may be some transactions like guarantees which are given or guarantees which are taken, which may not necessarily be reflected in my financials. However, the fact that there are transactions, I will still have to show them. That is on transactions. And then is outstanding balances, which can include debtors, creditors, loans given, loans taken, balance sheet values as on the closing will have to be shown. This can be shown individually for each company, or if there are many companies, you can group it into all subsidiaries, all joint ventures, all associates, and show the total values. If I still want to show some particular transaction separately because it is material, I am permitted to show that separately considering the materiality. Okay, so this is details regarding name and nature of relationships as well as transactions and outstanding balances. Now, the important points that you need to know for which cases can possibly come is, over here, it is possible that the related party relationship got established somewhere in the middle of the year. And maybe it got even terminated before the end of the year. Is there still a related party relationship? Yes. Because a related party relationship is a relationship which can be in existence at any point of the year. Which means it is possible that I acquired control over a subsidiary on 15 July and I lost control by 31st December. Then from 15 July to 31st December for 5.5 months, whichever transactions have happened, only those transactions will be shown as a part of the related party report. Remember, in my P&L, I might be doing transactions throughout the year, even before the related party relationship was in existence or even after that. That is before July or after December. However, in the related party report, I will only show transactions which have happened during the period the related party relationship was in existence. Second, the accountant might argue that the transactions are of a very small amount and hence insignificant, or the transactions are at fair price and hence you don't need to disclose. Remember, irrespective of whether they are fair price or not, you have to disclose it in the related party report. Point number one. Second, the fact that the transactions are with the related party, they are material by nature, irrespective of the amount, and hence irrespective of the amount and irrespective of whether they are at fair price or not, you have to give a disclosure in the related party report. Further, if the transaction is at other than fair price, then you can voluntarily disclose the terms at which the transactions have happened, but irrespective, you are not a transfer pricing officer, you are an accountant, your job is to reporting, and hence you will report all the transactions, all, irrespective of the amount, irrespective of the pricing of those transactions. Further, if the transactions have happened with KMP, then you will have to give a breakup between how much of the compensation is linked to short-term benefits like salaries or bonus, how much is linked to post-employment like provident fund or gratuity, how much is linked to other long-term benefits like a jubilee bonus, how much is linked to termination like VRS, and how much is an ESOP. So you'll have to give a breakup for these items as well. Related party report has never come in your exam to prepare this report. However, small cases of identifying whether a related party disclosure is required, if so, for how much period, like key point 1 and 2 have actually made it to the main exam. And the last part over here is an exemption which is available specifically for an entity which is a government entity and its transactions with the government as well as other government entities. Like for example, the government might control SBI, it might control Indian Oil, it might control BPCL, it might control ONGC, and there may be hundreds if not thousands and lakhs of companies which are under the purview of the government, where government either controls, jointly controls, or even significantly influences. Now, if two entities are related to each other, whether directly or even indirectly, because they are controlled, jointly controlled, or significantly influenced by the government, then the transactions between these two entities like ONGC and Indian Oil, or ONGC taking a loan from SBI, or ONGC and LIC, these will be exempted from related party disclosure because these two entities are related to each other, because they are controlled, jointly controlled, or maybe at least at one place significantly influenced by the government. So the exemption is available for government for transactions that the entity does, like ONGC does with the government, or the transaction that ONGC does with other entities like Indian Oil or LIC, which are also related to ONGC because they are members of the same group, or related because of the government. Now the challenge over here is the law clearly says that the relationship can be direct or indirect. Like for example, there can be a government where there are two entities A and B who are subsidiaries. Below that there are other two entities 1 and 2. Over here other two entities 3 and 4. Now these are all subsidiaries and they are controlled directly. A and B are directly controlled by the government, whereas 1 and 2 are indirectly controlled by the government. Now one can say that the relationship between 1 and 3 or 1 and A, all of these are related. One can say that one is a subsidiary of A, but A को subsidiary बनाने का direction किसने दिया होगा? Maybe the government. And as a result, they are related to each other because they are ultimately controlled, jointly controlled or significantly influenced by the government, and hence the transactions between A and 1, A and 2, A and B, A and 3, A and 4, or even A and the government are exempted from the related party disclosure because they are all related to each other, because they are controlled, jointly controlled or significantly influenced by the government. However, if you want to voluntarily disclose a particular transaction, you have not been prohibited. This is an exemption which is available. The only thing that you have to disclose is the name of the government which controls you and the nature of relationship, like control, joint control, or whatever is the relationship. So if you go to see, an entity is exempted from disclosure of transactions and outstanding balances with the government, which has control, joint control or significant influence, or another entity which is the related party merely because the government, either directly or even indirectly, has control or joint control or significant influence. However, we will show the name of the government and the nature of relationship with the government. I don't have to give this entire list of all the government companies and their transactions. I don't have to show. Having said that, if an entity can voluntarily wants to show a particular transaction so that people can understand the statements better, that has been allowed and it has not been prohibited. So that kind of takes care of the concept and the theory for IND AS 24. Now we will go into the sums, and there are a few questions. We'll discuss all the important last day revision questions at least over here. So let us review question number 1. Now over here what you have been given is this entire group of entities. Entity P is a controlling interest in subsidiaries SA, SB and SC. So you have P having interest in SA, SB, and then later it will be given that SC is a subsidiary of SB. Now SC is a subsidiary of SB, fair enough. P also has a significant influence over associates A1 and A2. Okay, so there is a significant influence, and subsidiary SC has a significant influence over associate A3. Okay, so this is your entire group. Examine the related party relationships of various entities. So if I look at P, for P, SA, SB, SC will be related. Why? Because they are members of the same group. That is under clause A. A1 and A2 will also be related because they are associates of P, that is a reporting entity. And A3 will be related because it is associate of a group member, that is SC, and hence for P I can say SA, SB, SC as well as A1, A2, A3 will be related. The same logic will also run for SA, for whom P, SA, SB and SC are related because they are members of the same group. Further, A1 and A2 are also related for SA. Why? Because they are associate of a group member. A3 is also related because it is associate of group member. So over here all of these are inter se related. But when I go to A1, for A1, P is related because it is an entity having significant influence in A, and all the group members, P and its group members are treated as same, and hence they are also related. However, for A1, A2 is not related. For A1, A3 is not related. So when I look at A1, A2, A3, P, SA, SB, SC are related. However, A1, A2 and A3 are internally not related. That is question number 1. Question 2 is interesting. Now Mr. X has a 100% investment, as you can see over here, in company A. He is also a member of the key managerial personnel of company C. Okay, so they are KMP of C, and B has a 100% investment in C. So you have Mr. X who is having control over A, and he is a KMP directly of C. Now there is another entity B who is having 100% of C. That is fine. अच्छा आगे क्या पूछा हुआ है? Examine the related party relationship between C and A. From the perspective of C, is A related? Well, C is an entity over which Mr. X, who is a KMP of C, is a related party of C, and that same person, Mr. X, has control over A. So as per clause E, if you remember, will there be a related party relationship? Yes. At one place there is control, other place there is KMP, and hence there is a related party relationship? Yes, because that same person, that is X, under clause E is having control over A, and that same person X is also a KMP for C, and hence A and C become related. Now an interesting case is point B, where examine the related party relationship for C for A if X is a KMP of B and not C. So what is happening over here is, in the second case, X will be a KMP, for example, of B and not a KMP of C. Now for C, directly X is not a KMP. However, B is the parent entity. Can the KMP of the parent entity also be treated as KMP for C? Yes. And hence even in the second case, because Mr. X is a KMP of the parent entity, they will also be treated as a KMP of C. That same Mr. X is having control over A, and hence will there still be a related party relationship? Yes, there would still be a related party relationship in the second case. Third, will the outcome of A and B be different if Mr. X has joint control over A? No, the outcome will still be the same, because you need to have control or joint control at one of the places. So even if instead of control there is joint control, that is fine. And then maybe a KMP at the other place will still work. There's still a related party relationship. Last, will your outcome be different if Mr. X has significant influence over A? Now Mr. X has significant influence over A, and that same Mr. X is a KMP directly of C or through its parent, a KMP of C. At both places, there is none of the place where there is control or joint control, and hence in the last case there will be no related party relationship. So that is question number 2. Now 3 and 4 are fairly basic questions. Even 5 is a basic question. Acha, if you look at 6, Mr. X is a financial controller of ABC, which is a listed entity which prepares CFS in accordance with Ind AS. X has recently produced a final draft of financial statements of ABC for the year ended 31st March 12. To the managing director Y. Acha, is the managing director Y a KMP? Yes. For approval, Y is not an accountant, has raised the following query. Okay, one of the notes to the financial statements gives details of purchases made by ABC from PQR for the year ended 11/12. Okay. Y, who is a KMP, owns 100% of shares in PQR. Now you will have Y, who is a KMP of your entity, for example ABC, and that same Y is having control, for example 100% of PQR. Now, is ABC and PQR related? The answer is yes, there is a related party relationship because of clause E, which says that this is an eligible person who has control at one place, and that same eligible person is the KMP at the other place, and hence there is a related party relationship. However, he feels that there is no requirement for disclosure to be made in ABC's statements since the transaction is carried out in normal commercial terms and is totally insignificant to ABC as it represents less than 1% of ABC's purchase. Now, can I say the related party disclosure has to be given irrespective of the size or amount? Yes, because the fact that it is with the related party, it is treated as material. Further, is it anywhere given that the disclosure is only to be given if they are not at fair price? No. So whether they are at fair price or not, whether they are significant or not in amount, you will always have to give a disclosure, and hence you will have to tell your managing director that the disclosure will have to be given as per the provisions of Ind AS 24. Are we clear with this? Okay. Then you have question number 8. Now ABC is a long-standing customer of XYZ. Now, merely because it's a customer, is there a related party? No. Now, Mrs. B, whose husband is a director in XYZ, purchased a controlling interest in entity ABC from 1st of June 17. Vapas. Now, there's a Mrs. P, whose husband is a director in XYZ. So, let's say we name him Mr. P. Now, Mr. P is a director in XYZ. So, will Mr. P be a related party? Yes, directors are KMPs, and hence Mr. P will be related party. Now, Mrs. P is a close family member, that is a spouse, and hence will Mrs. P also be a related party? Yes. Now, Mrs. P purchased a controlling interest in ABC on 1st of June 17. So, now when I look at this chart, there is XYZ who has a director in the form of Mr. P. The spouse or family member, Mrs. B, acquires control on 1st of June 17. Now, is there a related party relationship between XYZ and ABC? Answer is yes. Why? Again, under clause E, let's say if XYZ was a reporting entity, I would have said that for XYZ, there is a eligible person, that is Mr. B, who is a KMB, and his family member, that is Mrs. B, is having control over ABC. So ABC is an entity over which the close family member of my KMP has control, and hence ABC and PQR are related parties. However, Mrs. P acquired this control on 1st June 17 only, and hence transactions after 1st of June will require disclosure. However, transactions before 1st of June will not require disclosure, at least in the related party report. Now, you have been told, kidhar chale gaya? Just a second. Okay, you have been told over here that XY's sales of products from XYZ to ABC for the 2-month period from April to May totaled 8 lakhs. That is during the period when related party report relationship was not in existence, and hence this will not require a disclosure. Following the shares purchased by Mrs. B, XYZ began to supply products at a discount to the normal selling price and allowed ABC 3 months credit, which was previously only 1 month, which was normal credit policy. So I am giving favorable terms. Sales of the products from XYZ to ABC in the 10-month period from 1st June to 31st March totaled 60 lakhs. Will that require disclosure? Yes. And on 31st March 18, the trade receivables of XYZ included 18 lakhs, which was from amount owing from ABC. Will that also require disclosure? Yes. And as then show how the above event will be reported in the financial statements. Okay, overall financial statements of XYZ for the year ended 31st March 18 and mention the disclosure requirements as per Ind AS. Now, in the overall financial statements, in your P&L, there will be a total sales of 68 lakhs will be shown. In your balance sheet, your total receivables of 18 lakhs will be shown. However, when you prepare a related party report, then sales during the period when the related party relationship was in existence is 60 only, so that will be shown. And in the outstanding balances, 18 lakhs will be shown. Apart from that, if required, you will also show voluntarily the favorable terms at which the transactions have happened. So this is your overall presentation in the financial statements for question number 8. Then you look at question number 10. This is linked to that exemption. Government G directly controls entity 1 and 2. So you will have G controlling 1 and 2 and indirectly controls entity A and B through entity 1. It's clearly given that it is indirectly controlling A and B through entity 1 and C and D through entity 2. Okay, so this is C and D through entity 2. Person X is a member of the KMP of entity 1. Okay, so this is a KMP, individual. Examine the entity to whom the exemption from disclosure is to be given and for transactions with whom. So if I look at entity 1 and its transactions with the government, entity 1 and its transactions with entity 2, as well as C and D, as well as A and B. Sir, all of these entities, any transaction, if any, will be exempted because either it is a transaction with the government or transaction with other entities which are either directly or indirectly controlled by the government, and hence these transactions will be exempted. However, the transactions between entity 1 and person X will not be exempted because KMP के साथ जो भी transaction होता है that will require disclosure. Further, Mr. X will also be a KMP for A and B, and hence transactions of A with any of these companies. So ये पूरा जो group है, any of these transactions, they will be exempted because each of these entities are either directly or indirectly related with the government. However, A with Mr. X will not be exempted if there is any transaction because KMP of the parent is also KMP of A. KMP of the parent is also KMP for B. However, what do you guys think? Is Mr. X a KMP for entity 2? Does KMP include KMP of a group member? No. KMP is a KMP of the reporting entity or KMP of the parent, and hence Mr. X is not even a related party for entity 2 C or D, and hence if there is, by the way, any transaction, there is not a related party transaction in the first place, and hence the question of exemption does not arise because of related party transaction in it. So generally we will say that the exemption will be available for related party transactions internally between entity 1, 2, A, B, C, D or the government. All of these transactions will be exempted from disclosure in the related party report. However, any transaction between entity 1 and Mr. X or A and Mr. X or B and Mr. X, if any, will not be exempted from the related party report and will require disclosure. Okay, next you will go to question number 11. Now, remember, you can also have control through a trust. Like Mr. X owns 95% of entity A and is its director. He is also a beneficiary of a trust and owns 100% of entity B. So when you look at Mr. X, owns 95% of A, and hence, and he is also a beneficiary of the trust which is owning 100% of B, of which he is a director. Whether entities A and B are related parties, the answer is yes. Now this is irrespective of the fact. That there is a KMP or not, because the fact that there is control at both places. Mr. X directly controls A and indirectly controls B through the trust. There is a related party relationship between A and B, irrespective of the fact that they are common directors or not. Would the situation change if Mr. X resigned as a director of A but retained his 95% holding? No, the situation will not change. They will still be related parties because Mr. X still controls directly A and indirectly B through the trust. Now, Mr. X resigned as a director of A and B and transferred the 95% holding in entity A to a trust. So, what is now happening is there's Mr. X, there's a trust whose beneficiary is Mr. X, and that trust owns 95% of A, 100% of B. Can I say A and B are still related parties because they are still indirectly controlled by A through the trust, and hence they will be related parties. Acha. Next, you go to question number 12. A owns 30% of the share capital of entity B, okay, and has the ability to exercise significant influence. B holds the following investments: 70% of share capital of C and 30% of the share capital of D, with the ability to exercise significant influence. Acha, entity A transacts with C and D. Should A disclose these transactions as related party transactions in its SFS? Also examine the disclosure of such transactions in C and D as related parties. Now, if I look at the group structure over here, there's A holding 30% of B. So B is definitely a related party for A under clause B because it is associate of the reporting entity. However, when I look at C, C is a subsidiary of B. Remember, the word associate includes subsidiaries of associates. So B and C are treated as one and the same. So for A, if B is related, even for A, C is related, and hence this will be a related party for A and vice versa. However, the word associate does not include associates of associates, and hence D is not a related party for A because, well, B and C may be one and the same, B and D are not one and the same, and hence there's no related party relationship over here. And I guess that's about it. So this kind of takes an overall understanding for your related party standard. I hope you have understood and kind of you're good to go with the standard. If you do like this video, please do like it, share it with your friends, and do comment, and just that is a lot of encouragement for all of us as well. So that's about it. I'll see you soon with other revision videos. Till then, keep studying, keep working hard, and good luck. Goodbye. Take care.